Welcome to Griffonomics.
It's always good to be here.
Today, I want to start with a kind of mental exercise. I want you to picture a company that feels like it was designed by a committee. A committee of people who, never actually spoke to each other.
A Frankenstein's monster of a corporate structure. That's what I'm picturing.
Exactly. Picture this. You have one hand, okay, and this hand is selling things like bulletproof vests and security guard uniforms. We're talking heavy, physical, pretty low margin stuff.
The old school tangible goods.
Right. Then you have hand number two. This one's completely different. It's flying drones over the Florida swamps, checking on power lines after a hurricane has blown through.
High-tech service business. Very different.
Very different. And then there's hand number three. And, well, this is the one that actually matters for our deep dive today. This hand is building some of the most advanced artificial intelligence to autonomously detect landmines.
In active war zones.
In active war zones right now. In Ukraine.
It sounds like the setup to a riddle,
Oh.
What do you get when you cross a uniform shop, a drone inspection company, and a bleeding-edge defense contractor?
And the punchline isn't a joke. The answer is Safe Pro Group, ticker symbol SPAI.
SPAI.
And the reason we're digging into them today isn't because they're a chaotic mess. Although, you could certainly make that argument.
We definitely could.
No, it's because they are in the middle of one of the most radical, high-stakes corporate pivots we have ever seen. I mean, truly.
This is what we call a binary bet. There's really no middle ground on this one.
That's the perfect term for it. This is a company in a full-blown identity crisis. They are, to use the old cliche, they are burning the ships. They want to stop being this jack-of-all-trades safety holding company.
And morph.
Yeah, into a pure-play defense AI powerhouse.
And the stakes, they really couldn't be higher because, let's be blunt, they don't have a safety net anymore. We're looking at a company where the legacy revenue, the money that used to, keep the lights on.
The boring, predictable stuff.
That stuff hasn't just dipped. It hasn't had a bad quarter. It has collapsed. Utterly collapsed. We're talking down nearly 70%. The floor has completely fallen out from under them.
But, and this is the crazy part, at the exact moment the floor fell out, someone, it seems, handed them a rocket pack.
Or a parachute, at the very least.
Right. They just secured a $22 million capital lifeline specifically to go all in on this one piece of AI software.
And that right there is the tension of this entire story. It's what makes it so compelling. You've got the old Safe Pro, which is, objectively failing by every possible metric.
It's a train wreck.
It is.
Yeah.
And then you've got the new Safe Pro, which is incredibly promising, just full of potential, but it's barely generating $1 of revenue yet.
So our mission today is to tear this whole thing apart. We need to look at the ugly truth of those financial statements because they are ugly, but we also have to seriously audit this data moat they claim to have built in the fields of Ukraine.
Right. Is this real? Is it defensible?
Exactly. Is this a potential portfolio maker? A 10-bagger in waiting? Or is it just another speculative trap designed to catch retail investors?
Let's find out.
Okay, let's start with the old Safe Pro. We really need to unpack this three-headed monster, because if you don't understand where they're coming from, you can't possibly appreciate how desperate and how necessary this pivot actually is.
You have to understand the wreckage they're leaving behind.
Exactly. Let's talk about the first head, Safe Pro USA.
This is the foundation of the company, or at least it was supposed to be. Safe Pro USA is the manufacturing arm. They're the ones making the physical ballistic protection.
So we're talking really old school defense contracting.
Oh, very old school. Think body armor, plate carriers for soldiers, and the big, heavy bomb disposal suits, what they call EOD.
Explosive ordnance disposal.
Right. If you've ever seen a video of a technician walking slowly toward a suspicious package, and they look like the Michelin Man in a giant green suit, that's the kind of gear they deal in. Hard assets.
On the surface, that sounds like a solid business. The world is a dangerous place. Militaries and police forces, they always need vests and helmets.
You would think so. It seems stable. But when you actually peel back the layers of their Q3 2025 financial filings, this segment isn't just struggling, it's an absolute disaster zone.
Okay, so give us the headline numbers. What does the disaster look like?
Well, the top-line revenue for the segment, it dropped 17.7%.
Okay, so down almost 18%. That's not good, but, revenue drops happen. Companies have bad quarters.
Right, but that's not the scary part. That's just the appetizer. The scary part is the margin, or the complete lack of a margin. This segment lost over $612,000 in a single quarter.
A $600,000 loss.
Oh.
For a small cap company, that hurts. But let's try to contextualize it. What does that mean on like a per unit basis? Is this a volume problem or a cost problem?
It's both, but the cost side is what's truly shocking.
Yeah.
I ran the math on this, and I honestly had to check it twice because it looked like a typo. If you take their cost of goods sold, what it costs to make the stuff, and you add their operating expenses for just this one segment, salaries, rent, all of it, and you compare that to the revenue they brought in, for every single dollar of revenue they generated selling a vest or a suit, they lost approximately $7.55.
Wait. Stop. I want to make sure I heard that and that everyone listening heard it. You're saying they sell a product for $1.
Correct.
And it cost them a total of $8.55 to make it and sell it for a net loss of $7.55.
Essentially, yes. That's what the numbers show. For every dollar that came in the door, $7.50 went out the back.
That's not a business model.
Yeah.
That's a charity for their customers.
Yeah.
How does that even happen mathematically? How do you lose that much money per sale?
Well, it happens when you have a really high fixed cost structure, warehouses, machinery, staff, insurance. But your sales volume just evaporates. You're still paying to keep the lights on, and the staff employed in a factory that isn't moving nearly enough product out the door.
So the overhead is just eating them alive.
Eating them alive. But there's another more critical layer here that explains the sudden collapse. Tariffs.
Ah, the trade war angle.
Exactly. A lot of SafePro USA's original model, it seems, was built on importing components or even finished goods, often from China, and then either assembling them or just reselling them. It was an arbitrage play.
A pretty common model for this kind of gear.
Very common. But when the geopolitical winds shifted and those tariffs spiked, their entire cost basis just exploded. Management, in their press releases, they've used the word recalibrate.
Recalibrate. That is classic corporate jargon for we are bleeding out and have no idea how to stop it.
It's a huge red flag. They've effectively admitted that the old business model of importing and reselling is structurally broken. It cannot be fixed. They're trying to shift to more domestic manufacturing to get around those tariffs, but that takes a huge amount of time and, more importantly, money.
Two things they're desperately short on.
Precisely. So right now, head number one of this monster isn't just dead weight. It's not just sitting there. It is actively trying to drag the entire company underwater. It's a cash incinerator.
Okay, so the vest and uniform business is a financial black hole. Got it. Let's move on to head number two. This one always seemed more promising to me, more modern. Airborne response.
Right. This is their drone services arm. And to be crystal clear, this isn't a company that's manufacturing drones.
No, they're not competing with DJI.
Not at all. They are flying them. It's drone as a service. They're a service provider.
Like an Uber for aerial inspections.
Yeah, that's a great way to put it. They have pilots, they have fleets of commercial drones, and they go out and inspect critical infrastructure. Think telecom towers, power grids, pipelines. Their crown jewel client, the one they always talked about, was a massive contract with Florida Power and Light, FPL.
FPL is huge. They're part of NextEra Energy. Having them as your flagship client is a massive validator for your business. It says you're legit.
It absolutely is. And the thesis behind it was perfect. On paper, Florida gets hurricanes.
A lot of them.
A lot of them. Hurricanes knock down power lines. FPL needs to know immediately which lines are down and where so they can dispatch repair crews efficiently. SafePro sends up the drones, they fly the lines, map the damage with video and photos, and FPL gets a clear picture of the disaster zone. It's a perfect use case for drones.
Sounds like a slam dunk.
Yeah.
So why is this segment failing? Because when I looked at the numbers here, they were somehow even more shocking than the manufacturing arm.
They are. Revenue in this segment plummeted over 91% in the third quarter.
91%. That's not a drop. That's a statistical zero.
Yeah.
That implies the business essentially stopped existing for 3 months. Did they lose the FPL contract?
No. And this is the crazy part. They still have the contract.
Then what happened?
They lost the weather.
They lost the weather. What does that mean?
The profound irony of this business model is that its success is inversely correlated with sunshine. Q3 2025 was a remarkably quiet hurricane season, at least for their specific operational area in Florida.
So no storms.
No major storms meant no emergency callouts. No callouts meant no billable hours. Their revenue stream is almost entirely event-driven.
So they're just sitting there paying pilots, maintaining these expensive drones, just waiting for a disaster that, luckily for the people of Florida, never came.
Precisely. And it highlights the extreme fragility of what we call standby revenue. Unless you have a really hefty retainer fee built into your contract, which it appears they didn't, or at least not one large enough to cover their costs, your revenue is entirely at the mercy of Mother Nature. You are literally betting on destruction to make your numbers.
That has to be a tough way to please Wall Street. Sorry, investors. The weather was just too nice this quarter, so we missed earnings by 90%.
It's impossible to model. You can't forecast it. And that's why, despite the cool factor of flying drones, this services segment has proven to be a financial trap for them. It's lumpy, it's unpredictable, and it's capital intensive.
Okay, so let's just recap the legacy situation before we finally get to the sexy AI stuff. We have a manufacturing business that's being killed by tariffs and crushing fixed costs.
Check. A cash incinerator.
And we have a drone services business that's being killed by, of all things, good weather.
Check. An unreliable, event-driven business.
And combined, these two segments are generating just a fraction of the cash needed to sustain the company as a whole.
They're a net drain, a massive one.
Which brings us at last to head number 3, the savior, the pivot. The whole reason we're even talking about this company, Safe Pro AI.
This is where the story completely shifts genres. We go from a distressed industrial company to a high-tech, speculative, deep-tech defense play. Safe Pro AI is their proprietary machine learning software, and it is designed for one specific, horrifyingly difficult task, finding landmines from the air.
And unexploded ordnance, too, UXO.
Right. The cluster munitions, the artillery shells that didn't go off, all the deadly stuff left behind after the fighting stops, or even while it's still going on.
Now, we are going to dive really deep into the technology in a minute, because this data moat they've built is the entire bull thesis for the stock. But just sticking to the business side for a moment, what does this segment look like on the P&L right now?
In Q3 2025, it looks like a black hole for cash.
Give me the revenue number.
Revenue was zero.
Zero. You don't mean low or negligible. You mean literally $0.00.
Effectively, yes. I mean, to be technically precise, the previous year in the same quarter, they booked about $4,000, maybe a small pilot or something, this quarter. Nothing material that they reported. Zero.
Okay, so zero revenue. What were the expenses?
And yet, this segment recorded a net loss of $3.53 million.
So let me get this straight. They spent $3.5 million in 90 days to make $0.
That is correct. And if you are a traditional value investor, you look at a statement like that and you just run for the hills. You close the report and you never look back.
Of course. You'd say this isn't a business. This is a pre-revenue R&D project that's masquerading as a public company segment.
And this is the biggest but in this whole story.
Yeah.
That $3.5 million loss is the only reason anyone is still paying attention to this stock. That money isn't just being wasted. It's being burned to build something that the market thinks might be worth hundreds of millions or even billions down the line. They're betting the entire farm on this concept they call embodied intelligence.
Embodied intelligence. I saw that phrase all over their investor deck. It sounds like classic buzzword bingo, you know. Synergistic embodied AI for a new paradigm.
Yeah.
What does it actually mean when you're in the mud and the bullets are flying?
It's actually a really important concept. It means moving the brain onto the drone.
Okay, unpack that.
In the old model, the airborne response model, you flew a drone, you recorded hours of video, you landed it, you took the little SD card out, and then a human being had to sit in a dark room and watch 8 hours of grainy footage to try and find a tiny cracked insulator on a power line.
Boring, incredibly slow, and very expensive from a labor standpoint.
Exactly. Embodied intelligence means the drone itself has a brain. It's running the AI model on its own hardware. It is processing the video feed in real time while it is still in the air. It's not just a camera anymore, it's an analyst. It's the thing that's saying, alert, there is a mine, alert, there is a tripwire, alert, there is a Russian cluster bomb. It builds the threat map automatically, instantly.
Okay, that's a powerful concept. But anyone can write AI on a PowerPoint slide. We see it every single day. Why is this specific pivot being taken so seriously? Why did sophisticated investors like Owners and Unusual Machines just hand them $22 million if the revenue is zero?
Because of two specific, very powerful validation events that suggest this isn't just vaporware. This isn't some Silicon Valley startup promising to change the world from a coffee shop in Palo Alto. They actually took this technology to hell and back to prove it works.
Let's talk about the first and most important one. Let's talk about the Ukraine crucible.
This is the origin story. It's incredible. It really starts with two scientists, Jasper Bauer and Gabriel Steinberg. They were working on these detection algorithms here in the U.S., literally flying drones over the Great Plains in places like Oklahoma.
And what were they looking for? Were they using fake mines?
Exactly. Fake mines, painted rocks, watermelons, scrap metal. They were just trying to teach the computer the basics. This is a circle, this is a square, this is what metal looks like from above.
Yeah.
But they quickly realized something absolutely critical.
What was that?
You cannot realistically simulate a war zone.
Why not? I mean, a mine looks like a mine, right? A metal disc is a metal disc.
On a lab table, yes.
Yeah.
But in a real war zone, a mine is never just sitting there perfectly. It's half buried in the dirt. It's covered in 6 inches of mud. It's hidden under a blast crater from an artillery shell. It's been overgrown with wheat because no one has farmed that field in 2 years.
So the context, the noise in the image changes everything.
It changes everything. The signal-to-noise ratio is completely different. So Bauer and Steinberg, they realized that to make this work for real, they needed real data. So they packed up their gear, they got on a plane, and they went to Ukraine.
That is a hell of a field trip. That's a big step up from Oklahoma.
It's an unbelievable commitment.
Right.
And they deployed their application, which they call Spotlight, using commercially available drones. This is a key point. They were using off-the-shelf stuff like the DJI Phantom 4 or some Skydio models, nothing exotic or military grade.
So the hardware is a commodity.
The hardware is a commodity. The software, that was the secret sauce. They started flying patterns, scanning agricultural fields in recently liberated territories where the fighting had just passed through.
And the volume of data they managed to collect is just it's staggering.
It is the Moat. This is the whole thing. They analyzed over 2.1 million drone images. Some of the more updated data sets we've seen, quote, a number as high as 2.4 million. They covered over 10,000 hectares of land. And they didn't just take pictures, they found things.
A lot of things. What did they find?
The system identified over 38,000 confirmed landmines and pieces of unexploded ordnance. And we have to be specific here because it's not just about the number. They weren't just finding big, obvious metal anti-tank mines. They were finding the really nasty, insidious stuff. They were finding plastic mines.
The PFM ones. The so-called butterfly mines.
Exactly. Those things are evil. They're small, they're made of plastic, and they're notoriously difficult to find with traditional metal detectors. If you're a human deminer sweeping a field, you might walk right over one. But if you step on it, it's designed to tear your foot off, not kill you.
And the AI could see them from the air.
The AI, using a combination of high-resolution visual imagery and, crucially, thermal patterns, could spot their signatures.
Thermal. So they aren't just looking for shapes, they're looking at heat signatures.
Yes. It's a multispectral imaging approach. Plastic heats up and cools down at a different rate than the surrounding soil or vegetation. It leaves a faint thermal ghost. And that allows the eye of the drone's software to see things that a human eye from the ground or the air literally cannot perceive. It's a superhuman sense.
And that brings us right back to why this is a moat. Let's just drill into this for a second because I want to play skeptic here.
Please do.
Google has the best AI engineers in the world. Palantir has the best defense data integration platform. Lockheed Martin has billions in R&D. Why can't one of these giants just, spend a weekend coding this and put little SafePro Group out of business?
Because the code is a commodity. The data is the asset. That's the fundamental truth of modern AI. You can have the most brilliant algorithm ever written, but if you train it on 1 million pictures of mines neatly arranged in a parking lot in Arizona, it will fail miserably in a muddy, overgrown wheat field in the Donbass.
Right. Garbage in, garbage out.
Precisely. To train a machine learning model to be, say, 92% accurate in a real-world, chaotic war zone, you need hundreds of thousands, if not millions, of labeled images from that exact type of environment.
So the real barrier to entry here isn't the software engineering talent. It's the access. It's the data itself.
It is 100% the data. To replicate SafePro's dataset, a competitor like Palantir or a big defense prime would have to somehow go to Ukraine, get permission from their military during a hot war, fly drones for years, survive the constant GPS jamming and a threat of being shot down, collect millions of images, and then have human experts manually label every single one of those 2.4 million images to teach the AI what it's looking at.
That's the sim-to-real gap I've heard about, the difference between a simulation and reality.
It is a massive, massive gap. It's a chasm. And what's important here is that SafePro has already crossed it. Most of their potential competitors are still standing on the sim side working in labs, and that unique battle-hardened data advantage is what they are now trying to sell to their ultimate customer, the U.S. Army.
Okay, let's touch on that briefly before we get to the partnerships that are making this all possible. They were recently selected for the U.S. Army's CFWE 2026.
The current Force Warrior experiment. Yeah.
That sounds like an event at a sci-fi convention. What is it in reality?
It's basically the Army's way of kicking the tires on new technology. It's a very big deal. It's like a bake-off for new military gear. And Safe Pro was specifically selected for the live breach maneuvers. Now, this is a critical distinction.
Why?
Because it moves the conversation away from humanitarian demining, which is, the slow, careful process of cleaning up a country after a war is over.
Right, a cleanup operation.
And it moves it into tactical breaching.
Which means using this technology while people are actively shooting at you.
Exactly. It's about finding a safe path through a minefield during an assault in real time, under fire. That is a much, much higher value proposition for the military than just cleaning up a farm 5 years from now. It's about winning the battle today.
So they have the data from Ukraine, which is their Moat, and now they have the foot in the door with the U.S. Army. But they're still a tiny company with, a few $1 million in the bank before this recent raise. They can't exactly build a global defense software network on their own.
No, absolutely not. They'd get crushed. And that is why the strategic alliances they've just formed are so vitally important to this story. They have effectively deputized larger, more established companies to help them scale and get to market.
Okay, so let's meet the strategic saviors who came in with the lifeline. First up is Ondas Holdings.
Ondas is a very interesting partner. They're a significant player in industrial tech, wireless data, and automated data systems. They came in and invested $14 million directly into Safe Pro.
And they did it at $7 per share, right? I remember seeing that. That was a big premium to the market price at the time, wasn't it?
It was a huge premium. That's not a passive investment. That shows real conviction. Ondas has this software platform called the 4M Defense Land Intelligence Platform. You can think of it as a massive operating system for industrial and defense sensor data.
An ecosystem.
Exactly. And their plan is to integrate Safe Pro software, the product name is SPOTD, directly into that larger 4M system.
So Safe Pro provides the eyes that find the mines, and Ondas provides the larger brain and the distribution network to sell it.
That's the fundamental idea, but the partnership that gets me really excited, the one that feels like it's straight out of a spy movie, is the one with Red Cat Holdings.
Red Cat. The name alone is just cool. They make the Black Widow drone, right?
They do, and Red Cat is arguably the hottest name in the world of small tactical drones right now. They are deeply, deeply involved in the U.S. Army's short-range reconnaissance program, the SRR program.
Short-range reconnaissance. So basically, these are the little drones that every squad of soldiers will eventually carry in their backpacks. The individual soldier's eye in the sky.
That's exactly what it is. And the collaboration here is to embed the Safe Pro AI directly onto the hardware of the Black Widow drone itself. This goes right back to that embodied intelligence concept we were talking about earlier. The AI lives on the drone.
Okay, so walk me through the workflow here. I'm a soldier in a field in some future conflict. I've got a Red Cat Black Widow drone in my pack. I pull it out, I throw it in the air. What happens next?
In the old world, you'd have to fly the drone manually with a controller, staring at a little screen, trying to visually spot something that looks out of place. It's hard, it's slow, and you're distracted.
You're a target.
You're a target. In this new world, the Red Cat and Safe Pro world, the drone can fly itself on an autonomous path. It scans the terrain. The AI chip on the drone is processing that 4K video feed in real time. It's not sending it back to a server. It's thinking for itself.
It's on the edge, as they say.
It's processing on the edge. It identifies a potential mine. And then, and this is the absolute killer app feature, it immediately sends the coordinates of that threat directly to a system called ATAK.
ATAK, A-T-A-K. I keep seeing this acronym pop up everywhere in defense tech. Unpack that for us. What is it?
It stands for the Android Tactical Assault Kit. And it has become the standard operating picture for the U.S. military and many of its allies. If you talk to anyone in Special Forces, the infantry, the Marines, they live and die by ATAK.
So it's basically Google Maps for a war zone.
A perfect analogy. But it's Google Maps with dozens of extra layers. It shows where all the friendly forces in your squad are. It shows where the enemy was last spotted. It shows the planned route where the medevac helicopter can land. And now, thanks to this integration, it shows where the minefields are.
So let's paint the picture. I'm a squad leader. I've got a ruggedized tablet or a phone strapped to my chest rig. I look down at my screen. I see a map of the village I'm about to enter. And now I see, what, a bunch of red boxes?
You see red boxes or red dots or some kind of warning symbol overlaying the street, the field, the doorway of a building. It's an instant, unambiguous warning. Do not go here. And the drone put those warnings there automatically just 5 seconds ago.
That is profound. That completely changes the game. It takes demining from being this slow, meticulous, almost archaeological process with a guy with a stick.
Yeah.
And turns it into a real-time, dynamic, tactical layer of information that helps you win the fight.
It facilitates maneuver. Speed is life in combat.
Yeah.
If you know where the mines are, you can move fast and avoid them. If you don't know where they are, you have to crawl. Or worse, you walk into them. This technology lets soldiers move fast.
It sounds incredible. It truly sounds like the future of ground warfare. But
Yeah.
I have to be the buzzkill here. I have to pull us back from the battlefield to the boardroom in Florida. Because while the technology is winning medals and praise, the company's bank account is losing a lot of blood.
It is time for the cold, hard dose of financial reality. We have to look at these numbers.
We mentioned it earlier, but it bears repeating. In Q3 of 2025, the total revenue for the entire company, all three segments combined, was $101,422.
And that was down 69.3% from the prior year, a collapse.
And the net loss,
The net loss was $5.01 million.
which means on a monthly basis, they are burning over $1.5 million. My math was off earlier. It's even worse.
The burn rate is staggering. And remember, the Safe Pro AI segment, the future, the savior, the thing that finds mines in Ukraine, it generated $0 in revenue in that quarter.
That is the absolute critical risk factor here. You can't escape it. Right now, for all its promise, SafePro AI is a pre-revenue R&D project. They have proven the technology works in the field, but they have not yet proven that anyone will actually pay for it on a recurring basis.
The proof of concept is there. The proof of business model is not.
So they're burning $1.5 million a month. How much cash did they have before this new investment? How did they not go bankrupt already?
They were on the verge. The auditors had put a going concern warning on their financial statements.
Which is auditor speak for, this company is very likely about to die.
It's the financial kiss of death. But they fixed it, at least temporarily, with what we're calling the lifeline.
The $22 million capital raise.
Led by Ondas and Unusual Machines. That $22 million is the only reason we're having this conversation today. It removed the immediate threat of bankruptcy and gave them a runway.
Okay, but let's do the math on that runway. $22 million in the bank. A burn rate of, let's be generous and say it's only $1.2 million a month after some cuts. Plus, they probably want to ramp up spending on sales and marketing to land these big contracts.
Yeah.
How long do they actually have?
My model gives them about 12 to 15 months, maybe 18 if they are extremely frugal. But you can't afford to be frugal when you're trying to win massive army contracts. You have to spend money to make money.
So the clock is ticking. And it is ticking very, very loudly.
Extremely loudly. This is a race against time. The entire investment thesis comes down to one question. Can they convert these pilot programs, the Army CFWE, the Red Cat partnership, into a binding, recurring revenue, multi-year software contract before that 15-month timer hits zero?
If they do, they're heroes. The stock probably goes to the moon. If they don't.
If they don't, they are right back where they started, begging for more money, but this time from a position of weakness with a much lower stock price and a lot of very angry, diluted investors.
Speaking of angry, diluted investors, let's talk about the structure of this deal and the state of the cap table. Because raising $22 million when you have virtually no revenue isn't free. There's a steep price.
It is extremely expensive for existing shareholders. The price you pay is dilution.
This share count.
Right. The number of outstanding shares jumped from roughly 14.5 million to around 21 million in 2025. So just think about that. If you owned 1% of the company before this all happened, you now own significantly less. Your slice of the potential upside just shrank by about a third.
And it's not just the shares that exist on the market right now, it's the shares that might exist in the future.
The overhang. This is a concept that a lot of ITEL investors miss, and it's so important. SafePro filed a $100 million shelf registration.
Okay, explain that like I'm five. What is a shelf registration?
Think of it like a pre-approved credit card from the SEC. But instead of borrowing cash, the company can use it to sell new stock. They have all the paperwork filed and pre-approved to sell up to $100 million worth of new shares into the open market whenever they feel like it, with very little warning.
So if some good news comes out, let's say they announce a new pilot program and the stock price starts to run, it hits $8, management can just pick up the phone and say, great, let's sell $10 million worth of stock right now at this price.
Exactly. And that action immediately floods the market with new supply, which almost always pushes the price back down. It creates a kind of psychological ceiling on the stock. Sophisticated investors know that that massive block of potential supply is just sitting there on the shelf waiting to be dumped on any rally.
It's a wet blanket on momentum.
A huge one. And then on top of that, you have the warrants. Oh, the warrants. There are millions of them out there with a strike price of $6.
Okay, so if the stock price ever manages to get above $6,
the warrant holders, these are typically the investors from previous desperate financing rounds, they have the right to buy stock at $6 no matter what the market price is. So if the stock is at $7, they can buy at $6, sell immediately at $7, and pocket a risk-free dollar per share.
So $6 becomes a massive wall of selling pressure.
Yeah.
A resistance level.
Becomes a huge resistance level. It's going to be very, very difficult for this stock to break through that $6 level and stay there without some kind of truly transformative news, like a signed, sealed, 9-figure contract.
So we have dilution from the recent raise. We have a $100 million shelf offering hanging over our heads, and we have a warrant wall at $6.
But then management does something that completely confused me. In December of 2025, they authorized a share buyback.
A $3 million share repurchase program, yes.
I don't get this move at all. You are burning cash at an alarming rate. You just had to raise $22 million just to survive the next year. Why on earth would you take $3 million of that precious lifeline and spend it buying back your own stock? It's a very mixed signal, and it's a controversial move. From a pure academic finance perspective, it is arguably reckless. You should be hoarding every penny of that cash for R&D or for hiring a top-tier sales team.
So why do it? What's the play?
It's all about signaling. It's about confidence. Management is trying to send a powerful message to the market. They're saying, we know our stock is beaten down, and we believe it is profoundly undervalued. We are so confident in our future that we're willing to use our own scarce capital to buy it.
It's a poker move. A big one.
It's either a massive bluff or it's a massive show of genuine faith. They are trying to put a floor under the stock price and tell the shorts that they're willing to fight back. Whether it works or not remains to be seen, but it definitely tells you that management truly believes this pivot is going to work.
Okay, let's zoom out. We've torn this company apart. We've got the three-headed monster with two heads that are basically dead and one head that is brilliant but incredibly expensive. We have the Ukraine Jada Moat, which, it seems legitimate and very hard to replicate. We have clear interest from the U.S. Army. We have the terrifying cash burn. We have the dilution. What is the final verdict?
You have to view this stock through the lens of a binary bet. There is no other way to look at it.
Define that for the listener one more time. What does that mean for their portfolio?
A binary bet means there is no middle ground. There is no gentle outcome here. This is not a company that is going to grow 5 or 10% a year and start paying a nice little dividend.
It's not Coca-Cola. It's not a utility stock.
Not even close. It is a coin flip with a massive payoff on one side and ruin on the other. Heads, they win a major multi-year SaaS contract. The Army formally adopts Spotlight AI. And the stock doesn't just go up, it multiples, maybe 5x or 10x. Tails, the money runs out, the pilot programs stall, the government gets bogged down in bureaucracy, and the equity probably goes to zero.
So if I'm building out the bull case in my mind...
The bull case is the moat, period. It's the 2.4 million labeled battlefield images. It's the fact that Palantir or Lockheed can't just snap their fingers and replicate that war zone data. The bull case is that they are the only player with a proven, validated, working solution for a problem that is becoming central to modern warfare: autonomous threat detection.
And the bear case.
The bear case is simple: execution risk. It's the risk that the legacy business continues to bleed cash and distract management. It's the risk that the government contracts get delayed, because government contracts always get delayed. And it's the risk that they hit that 15-month financial wall before the first big check comes in.
So how do we rate it? What's the official Griffonomics verdict?
I am rating this a speculative hold, or maybe more accurately, a lottery ticket.
A lottery ticket. That's a strong statement.
It is. If you decide to buy this stock, you should treat that money as if it is already gone. Put it in your highest risk bucket. If it hits, it could be a true portfolio maker. But do not bet the mortgage on it. Do not make it a core position. The dilution risk and the cash burn are very, very real headwinds.
Risk defined.
No ask, Falcon.
Portfolio protected.
Before we close out, I want to leave our listeners with a broader thought. We've spent this whole time talking about stock prices and burn rates and warrants, but just stop and think for a moment about what we're actually describing here.
The automated digitization of warfare. It's a paradigm shift.
We are crossing a major threshold as a species. For the last 100 years, demining meant a human being, sweating, probably terrified, crawling on their stomach with a knife or a stick, carefully, painstakingly poking the dirt to find a bomb.
It was intimate. It was visceral. It was human versus machine in the most primitive way. And now, we are moving very rapidly to a world where a swarm of autonomous drones flies over a city. A computer in the sky, an AI, decides what is a threat and what isn't. It builds a digital death map, and it beams that map to a soldier's phone half a world away or half a block away.
It is incredibly efficient. It will undoubtedly save the lives of soldiers and civilians, but it also profoundly changes the nature of the battlefield. It abstracts it. It turns war into a data problem to be solved by an algorithm.
And SafePro Group is right at the bleeding edge of that fundamental shift. They are the test case. The big question is, can you monetize the kill chain? Can you turn a map of death into a recurring SaaS revenue stream?
That is the grim but absolutely fascinating question at the very heart of this SPAI story.
It's a brave new world, and SafePro is flying right into the heart of it.
Indeed they are.
That is all the time we have for this deep dive. We hope this analysis helped you unpack the strange, contradictory, and frankly fascinating world of SafePro Group.
Always a pleasure to dig into the details on a story this complex.
Remember, please do your own research. This is a wild one. Risk defined. Portfolio protected. Thanks for listening to Griffonomics.